welcome to another episode of HashWise Convo. Today, joining us is Ashu, CEO of Zeru Finance. I'm really thrilled to have you here, sir. Thank you for your time.
Thank you. Pleasure is all mine. And happy December.
Awesome. Yeah. Before we dive straight in, could you briefly introduce yourself to our listeners?
Yeah, basically been in crypto since 2016, 17 as a retail investor. 2020, I joined the space full time. Was a founding member of Polytrade, which is an RWA protocol. And after that, spent time with two layer one blockchains, Reef and Router protocol, Router solving for interoperability. So I was, yeah, heading growth, strategy, marketing at these places. And yeah, after that, thought that it's high time to build some cool applications. Having spent a lot of time in infra and enable consumer crypto. So yeah, here we are with Zeru. So that's me. But yeah, before Web3, have worked with a bunch of Web2 companies, Hewlett Packard, Johnson and Johnson for almost 15 years. So yeah, got some experience under the belt.
And that's really awesome to hear, like a long journey from be a typical user to a founder in DeFi. So kudos to you because it's awesome.
Thank you.
We need more people like you. Maybe let's start about Zero Finance. What inspired the idea behind it?
I think coincidentally, the idea was inspired exactly 2 years back. Exactly 2 years back during ETH India. So Akshay and Guru, who are our core devs, they were toying around with zero collateral loans, right? Because young devs out of university, they were looking for an educational loan, and when they looked at the blockchain space, there is no educational loans, personal loans, or credit cards, right? And then they looked at the market size, and educational loan actually is a $4 trillion category. Back then it was around $3 trillion, $3.5 trillion category. So that was the start. Okay, so there had to be a way to make zero collateral loans possible, and that is how all of this started, with that small spark. And yeah, they won the gold medal. Actually, I think they finished in the first place in the ETH India hackathon for creating an iterative algorithm that could disburse zero collateral loans. So yeah, that was the starting point.
Yeah, that's really cool. Uh, because we really
Yeah.
need this product in DeFi, and we have to find out or figure out how to access a credit in DeFi. What approach do you like stand by from Zero Finance?
Okay, so basically, we started with forking Aave V2. Okay, so the first iteration, first interaction of the protocol is exactly for a user is exactly like Aave, but we made some changes. Actually, a lot of changes. So we said that every time a loan is taken, every time a position is closed, we are going to lock in a percentage of interest and percentage of profits from the loans that the user generates through the DeFi strategies integrated into the protocol into an insurance fund, and that insurance fund becomes the fund which is backing zero collateral loans. So that was the starting point. But then we realized that without a credit layer, in the absence of a credit layer, the algorithm did not really work properly, because we needed to incrementally increase the amount of leverage that the users could take. So, funnily enough, our starting point was not to create a credit scoring system. Our starting point was actually an application, and we realized that there is no good way of solving for zero collateral loans except it being an iterative process where users are continuously building a reputation, and on the basis of the reputation, they get credit from the protocol, and they get to deploy this leveraged amount, leveraged capital into DeFi strategies. So there were two parts to this. One was the lending borrowing, and the second part was the DeFi yields, which are integrated into the protocol. So I mean, in total, the app itself is about 16,000 lines of code, right? And out of that, the Aave V2 and improvement over Aave V2 is about 9,000 lines. and then we have almost 2000, 2500 lines each for automating the DeFi yields. And what are the DeFi yields that we are talking about? It is essentially Uniswap or LSTs, LRTs, or providing liquidity on perp dexes. So we said that we need to simplify this because DeFi, in as it stands, is quite complicated, quite complex. So we need to make sure that we are able to use AI to simplify the whole process. So if in one click you and I can provide liquidity on Uniswap with leverage, that is a good start, right? And if we are able to lock in a percentage of the profits that we generate from the yield and a percentage of interest that is paid on the leveraged capital, then we can gradually grow the insurance fund. And that is how iteratively we can give birth to zero collateral loans. So then we kind of started building the credit layer, right? Because we realized that without having a credit score, credit layer, it is not possible to scale this. So the more times, more number of loops the user completes, his z-score increases, and the amount of leverage that he can take with the protocol also increases. Okay, and that kind of was the starting point for my zscore.ai, which is live right now. And then as the space progressed, as Eigenlayer launched, and as advancements in AI were made, we started to look at how can zscore be used as an industry wide standard. So it's we started with a small idea, okay, that we need to enable zero collateral loans, and we ended up building a credit infrastructure or a credit layer for all of DeFi. So yeah.
Yeah, many verticals from that. Yeah,
Yeah.
I see. That makes perfectly sense. Yeah, we are going to definitely discuss the DeFi products that you will offer in a second, but let's make a little bit step back and discuss the Z score, right? Because it's completely like a unique primitive in DeFi, let's say. Can you
Yeah.
explain how it works actually, and why is it a game changer from the DeFi space?
Yeah. So, I mean, before I get in, let us look at what efforts have been made in the credit space, right? So, there have been players like Credit Spectral who have attempted to create a credit scoring system in DeFi. So, it's not the first time that someone is building a primitive like this, but there are some fundamental differences here. So, we for one are using neural networks, AI neural networks for computation. I don't think anyone else is doing this. And second is the way we cluster the data and train the AI model. Okay, so as things stand right now, we have trained the neural network on data from lending borrowing protocols, specifically Aave. Of course, we will be adding more data from Morpho, Compound, and other, Zero Lend, other lending borrowing protocols. So that will be cluster number one. Then we will be adding data from Dexes, Uniswap, PancakeSwap, etc. And then we will be adding data from LSTs, LRTs. So there will be 4 to 5 different on-chain data clusters. And what happened during DevCon was we met the Reclaim team, and we found, we figured out, we jammed up a way in which we could bring in real world credit scores as well on chain using zktls. So we the integration is done in the backend. So what this will allow is for a user to establish his real world score as well, and that will kind of add to zscore as a composite. And we are envisioning zscore as a single universal composite which has multiple data clusters from from crypto, and we also have data from the real world. So we really will have a pretty robust, adaptive, and dynamic model for zscore. Now, why do I say robust? Because of multiple sources of data clustering, the way data has been cleaned up and fed into AI, it is going to be quite robust, and it is not going to be easy to get a good z-score actually, unless you have like really used lending protocols, provided liquidity on perps for years, and really have managed your liquidations well. You will get a z-score of 700, 750 or more. So it is not at all easy to build a z-score. So there are, I often get questions like, what if someone games the system? Yeah, I mean, surely they can try, but it will be a lot of effort. It is not, it's not going to give out z-scores just like that. So yeah, that is why we are kind of different. And second, I say, is adaptive and dynamic, because every time the user is increasing his on-chain activity or doing a new on-chain activity, the z-score should be responsive and adjust accordingly. And lastly, adaptive, because a z-score of 700 might be good for certain category of applications, but certain category of applications might actually want to cater to a lower z-score user, so how zscore is being used by various applications, various defi protocols, is up to them, and therefore the model has to be adaptive, and it should also be able to give behavioral patterns and categories based on scores. Okay, this guy is a flipper, this guy is a holder, this guy is a liquidity provider, this guy is a whale, so on and so forth. So once you have those kind of spectral analysis being done along with a universal z score, the end use of this is going to be enormous. And we have already got some early interest. I mean, for clarify, first things first, we are in very early stages. What we have right now is a proof of concept MVP, but as we speak to more people, as we develop and refine this further, we are very excited to be able to be useful for various categories of DeFi applications. Of course, we will speak about in detail on how every category of DeFi apps can use zScore. But yeah, that is how zScore works in a nutshell.
Yeah, thanks. That makes perfectly sense that the Z-score is basically customizable according to whatever the
Then,
apps their
yeah.
needs. So yeah, that makes sense. You basically have stole one of my questions, basically regarding the Z-score and if it's possible to game around it. So basically, it's not possible to fund basically new wallet, try to act like you are an honest guy for 1 month, borrow some zero fee crypto and then like never pay it back. So it's not possible basically with the system. So I'm glad to hear.
Yeah. So it's a combination of everything, right? A, it is difficult, it requires enormous effort, and B, once zScore is being used by several protocols, the cost of messing around with zScore and farming zScore, will actually be lot more than just behaving in a morally correct way and build a healthy score.
Yeah, you also mentioned two things that excites me a lot. The first one was that you are using the neural networks. Basically, can you put it in explain like I'm five way, like how the AI access the wallet history in this case?
Uh, no, so we will be releasing the details shortly. At this stage, we are publishing a paper, and very soon we will be ready to share it. But pretty much we take all the data. So in case of Aave, we have taken 4 years of data and fed it to AI as of now, and we will be dynamically feeding these data streams. So yeah.
Yeah, okay. And the second one was the ZKTLS. So what you are saying basically is that in the future, it would be possible to connect with your traditional financial provider in the real world and basically get the data into your platform. Am I right here, or is a little bit
Yeah.
different?
So, for example, if your on-chain z-score is about 450, let us say, okay. Now, with that wallet being connected to z-score, you choose to bring in Experian data. On Experian, let's say you have a CIBIL score, a credit score of 750, right? So you can prove that okay, the owner of this wallet, also have a real-world credit score of 750. So now your Z score will jump from 450 to, let's say, 550 or even 600 or more. So that is what users can do through ZKTLS. So
Yeah,
without
that's really
us
cool.
having to KYC or identify the user, or because it is through ZKTLS. So that is the
Yeah,
starting point. And this integration is already done. It should go live this year in December. So yeah. And in the future, yes, we can add more parameters. It is possible through ZKTLS. You can pretty much bring in age of bank account, gender, bank balance, whatever
yeah,
pretty much
yeah,
whatever you
yeah,
have. So it is possible.
yeah.
Yeah.
Okay. My next question is regarding the actively validated service because the Zeru Finance is built, let's say, on top of Eigenlayer and is actively validated service. Why did you choose to become an AVS?
Okay, so we all see the recent success of Hyperliquid, right? So for an app to be successful, it needs to have a good infrastructure working for it, right? And oftentimes, uh, people who are solving for business use case might not want to and might not have the required skill set to build the right infrastructure. Right. So imagine if there was no Eigenlayer, we would have had to build our own blockchain, our own infrastructure, and that is a lot of work. And especially for bootstrap teams, it's very, very difficult, right? And that is where Eigen's infrastructure is super helpful, because we really did not have to worry about building out an infrastructure. And here, need to understand that the compute is happening off chain. The data is being fed to this neural network, which is doing a computation and coming up. So that is us running our own operator and coming up with the score. Now this same computation will be run by 20 other operators, right? And they will obviously get incentivized by eigen tokens, our native tokens. So that is basically the AVS economics, operator economics, how it is supposed to work. And someone who acts dishonestly will face slashing. So essentially
Yeah.
what is happening is this off-chain compute is being run by multiple operators, and the results are then being stored in onto the blockchain. So that is why we chose to use AVS, because we really did not have to worry about decentralization, security, building our own infrastructure. None of that. We can just rely on Eigenlayer to do all of that. That is the
Mhm.
primary reason for our choice.
Yeah. Perfect.
Yeah,
Thanks for that.
because we have been I'll tell you a bit of a background, right? So initially we had a proprietary formula for zScore, which, because we were planning to use it locally within our own application, right? But then that again runs into questions like, okay, how did you derive this empirical formula? How do you know this is good, etc.? So we needed to bring in ML and AI, which means that we needed to run our own agent. But now it is possible to decentralize the computation and then put the results on blockchain for everyone to see. So there is absolute transparency, absolute decentralization, and complete security around zScore, thanks to Eigenlayer. So that is the primary reason for the choice.
Yeah. Yeah. Thanks for the explanation. It was great. Now let's jump straight into your products because you will offer several DeFi strategies. The first one is LPing, as you already mentioned. So one can LP with leverage, then the classical leverage, so trading,
Mm.
I guess, and then
Yeah.
the strategy bull and bear. Could you maybe go through each of them one by one and try to share details with
So
us?
bull and bear is the same as leverage trading. Okay, so right now
Okay.
we have two strategies, and again, just to clarify, this is for the application that we are developing, which is currently live on Base testnet, Berachain testnet, and Arbitrum. So we are starting with two strategies, but we will have more strategies in place. Now, what is happening is, let's first look at Uniswap. Now, typically in Uni V3, what happens is there is something called concentrated liquidity market making, right? Where you can choose the range of liquidity in for a pair in which you want to provide liquidity. Now if you can really narrow down the range, then your yields will be quite attractive. But there are several challenges. One is, how do you determine the narrow range where the yields are high? And second, how do you manage to make sure that the position stays in the range, right? The liquidity stays in the range. And thirdly, when the the volumes change, your yields are also going to change. So what we are doing is, we take so let's say there are 100 users, and 10 of them choose a leverage of 3x, another 10 of them choose a leverage of 5x, another 10 of them choose a leverage of 6x, and so on. So we will cluster users based on the leverage and the pairs that they have chosen to provide liquidity in. and we will put that into Uni V3 through a strategy controller. So strategy controller is a smart contract within the applications. So need to understand here that the funds are captive inside the Zeru app. So there is no question of someone taking a 10x leverage and walking away with the money, because the moment you take leverage, your funds are logged in the app, and then the strategy controller of the app deploys it into Uniswap for maximizing yields. So now, without any optimization, let's say WETH USDT pair has an APY of 6%, and you are eligible for a 5x leverage. So on your capital, you are already getting 30% APY, right? So that is APY times the leverage. Now, if you add optimization on top of that to make sure that there is automatic range selection and dynamic rebalancing of this of positions, so the APYs can significantly increase. So that is our thesis for LPing in Uni V3 or any DEX, which is a fork of Uni V3, which works on concentrated liquidity. Number one. Number two is bull and bear, which is essentially normal leverage trading. But here, yeah, it is non-predatory source of credit, because typically, if you do, leverage trading on sexes, your order can easily be front run, right? And that's the easiest choice for a DGen who has currently $1,000, is tempted in a bull market to take a 20x 50x leverage. But most often than not, they get liquidated by actors, because in a centralized world, everyone is able to see your order. So how do you kind of make sure that you get credit, but it's a non-predatory source of credit where your order is not front run. So that is the second strategy. In the future, of course, we will be adding LRTs, LSTs as strategies as well. So that will be an ongoing process. So whoever has I mean, fundamental things, right? So if I'm saying that, hey, your funds will be captive in the protocol, and I will allow you to take leverage, but you can only deploy it into inside the protocol in the strategies available, the onus is also on me to at least provide 3 to 5 uh, good blue chip yield strategies integrated in the protocol. Otherwise, nobody is
Yeah.
going to use it. So that
Yeah.
is the idea.
Yeah. Okay. How does Zero optimize the Uniswap V3 positions? Is it based on the history or the
Again,
performance, or how do you?
yeah, yeah, it is based on history. Yeah. So basically trying to predict the next tick range. Again, it is done
Yeah.
through AI. So yeah, we are training our AI model. So currently we have data from request network on which we are able to run Monte Carlo simulations to simulate various kinds of scenario. But yeah, in our limited beta mainnet release, we should be able to validate it with real market data.
Mhm. I'm also curious about the impermanent loss in this case. If I'm leverage on some LP pair and there
Yeah.
is impermanent loss, how that work?
No, so there will be. We cannot avoid impermanent loss.
Yeah.
As Zeru, from Zeru's perspective, we will have to face that impermanent loss. So that is going to be there. But yeah, the assumption here is that your yields will still be more than what you would get if you were to do it manually.
Yeah. Yeah. Okay. Now, tell me, what potential use cases do you foresee for zScore in general DeFi
Yeah.
landscape?
So that is our immediate focus, actually, because the first step is to build the credit layer, and second stage is to use it in an application. But if we look at lending borrowing protocols today, so you almost have what you need 150% collateral
Yeah.
to make a borrow, right? So there is a lot of over collateralization. Second, there is a lot of idle capital on chain. So to start with, you can improve LTVs. So right now, whatever LTVs a lending borrowing protocol is able to give for people with good Z score, they can give higher loan to value, value ratios. Secondly, interest rates, right? So if a user is really good, has a very good Z score, you might want to give them preferential interest rates. So this is the starting point for a lending borrowing protocol. Now, for dexes again, so for example balancer or other dexes, liquidity provisioning. So for example you can give lower swap rates to a wallet which has the profile of a holder, and you can charge higher swap rates on wallets which are potentially flippers. So that way you can have a better revenue management strategy as a dex. Right now, if there is an ecosystem who is going to do an airdrop, and we already have three or four major ecosystems which might be doing an airdrop in the next month or three. So they can use zScore as an anti-sybil check. So they can decide to give more airdrops, more incentives to people who have a good zScore. Another use case could be credit card providers, right? So for example etherfi cash. So how do you determine credit limit? So people with a good z-score can actually get a good credit limit. So these are some of the use cases that we have thought of. And obviously with conversations, as we go ahead with integrations, partnerships, we will continue to refine them, put out more details out there. But this is our
Yeah,
vision. We want to really make this happen because previous attempts by Cred and Spectral, they have not really found utility in the DeFi space. But by creating a DeFi native credit score, which is also supported by real world scores from ZKTLS, we want to make sure that there is adoption for the credit scoring system that we are building. And this should be the start of credit backed money markets in DeFi. So yeah, that
yeah.
is the hope.
And to be honest, do you think is it really feasible to have this like universal like protocol standard across the DeFi landscape?
I mean, one step at a time, right? So even if we are able to help three or four lending borrowing protocols to start with, it establishes that okay, this mechanism works, and that is we have to start somewhere. We have to start small, but we have to make sure that it is robust enough, and it is, most importantly, it is helpful enough. See, for example, what we can do is based on right now protocols that are giving out leverage, right, they are pretty much arbitrary. They have very arbitrary numbers. Okay, I as a a platform want to give 5x leverage or 10x leverage to my users, right? But is there a more scientific way in which people can provide leverage? And leverage here is the starting point for credit. We are not even going to loans at this stage, which will be a later unlock. But to start with, if we are able to rationalize leverage and de-risk leverage being provided. So for example, there is an interesting integration that we are planning with risk layer. So risk layer, if as you know, determines the risk of lending pools and risk of assets. So if we are able to combine z-score and risk layers as asset score, then that composite could be very very interesting for chains and protocols which which accept some really high risk high risk assets as collaterals, right? So for example, in Vera chain that is coming up, so there is a lot of assets that which might have significantly high risk exposure. So if it helps protocols to de-risk this by determining the z-score and risk score of assets under question, I think that could be very helpful for everyone.
Yeah, definitely. It makes perfect sense. One of my latest questions would be why did you not launch on mainnet, on testnet? You launch on three L2s, I guess, or two L2s plus
If you,
Verachain.
if you, it is in plan. Yeah, we will be launching on
Okay.
mainnet.
Yeah. Okay.
It is
Okay.
a
Cool.
mainnet. Yes. Yeah. So we are just deciding the operators. Planning for our audits. As soon as it is done, it will be launched on Ethereum mainnet. There is no question about it.
Yeah, yeah. I
Securities.
was
We are
just
all.
curious here. Yeah, because lately the discussion was always around if L2s are parasitic to Ethereum itself, or does Ethereum,
100%
stand
on
its place in the
100%
future.
Ethereum.
So,
Yes.
yeah, yeah, yeah. Okay. And what's your point
So
of view
Ethereum
on
would be.
this whole? Yeah, what's
Say
your point of
that.
view on this whole situation? Like that L2s are parasitic to Ethereum, and that ETH is like the middle kid, so the Bitcoin is done basically. The Solana is the fastest, and ETH is like the parasitic, chain, or the L2s are parasitic to Ethereum. Like, what's your point of view on this topic?
I think there are much more wiser people who have views on this. So I will let them comment. For me, I'm personally a big fan of Ethereum, and we exist today because of what Ethereum has done for the industry. ETH is money, the ticker is ETH. Surely, everything else is kind of built on top of that. Even if it is parasitic in the short term, I mean, if we look at Vitalik's recent six session notes, right? Eventually, it's a way of growing, right? And we have seen this in FMCGs, we have seen this in manufacturing. So it's yeah, it's like the how do you say, compress expand, compress expand, strategy to increase market share. So eventually, Ethereum will gain, even if in the short term it might look parasitic. But yeah, eventually I think Ethereum will stand to gain.
Yeah, this is alpha. Yeah, Ashu, my last question is, what's coming for Zero Finance in, let's say, the next 3 to 6 months? What we can
Yeah,
expect?
next 3 to 6 months. So right now so first we will prioritize my zScore, and then we will be launching the money market application. Now for my zScore, what is currently done is it is on testnet. It is taking Aware's data into consideration. So in the immediate future, we will be announcing the ZK TLS integration and enabling it. Number one. Number two, we will be adding data from more lending protocols into the mix to make zScore more inclusive. Number three, we will be adding newer data clusters, like I mentioned, DEXs, PubDEXs, LSTs, LRTs. And then number four, we will be launching my zScore on mainnet once we finalize. Yeah, we want to ideally have a pool of around 20 operators to start with. So we will finalize the operator economics. We'll finalize who, the operator set, and we'll conclude the audits for my zScore, and we will launch it on mainnet. We will take it to at least three or four players in each of the categories that I mentioned, to enable zScore as a service for lending borrowing protocols, for DEXs, for perp DEXs, for ecosystems, for crypto credit card providers. And once this has found some adoption, we will plan to launch our own money markets, which will be probably 6 months from now. But right now, we will completely focus on making sure that my zScore is super useful to DeFi, and it is helpful to ecosystems. It is helpful to users, helpful to protocols to make much more informed decisions based on the data and information that we are able to process.
Yeah, yeah. Thank you. Thank you very much. It's been a pleasure to having you on the show. I appreciate you, Ashu. Thank you for your time, and maybe see you next time here.
Thank you, Omar.